We're having another look at the final accounts and balance sheet in the 2013 paper. We're dealing with the Yes Limited, the private company. And just an overview of the final accounts first. We have net sales, there are your sales, net sales returns of 390,000. There were no sales returns in this question. And from that we're going to take off our cost of sales. Our cost of sales comprises opening stock and purchases, and in this question customs duties. It's a shoe retailer, so they would have imports from outside the EU. So you have customs duties, and you'd also have carriage inwards, not in this question. And those would be your costs in your trading account, from which you'd subtract your closing stock, and that would give you your cost of sales. So Yes Limited sold goods that had cost them 143,000 for 390,000, giving them a gross profit of 247,000. That markup, that profit on cost, that markup wouldn't be unusual in footwear retailing, but don't forget, of course, you must take all your expenses away from that to find your net profit, and you'd have high overheads, high expenses in retailing. So we have gross profit 247,000, to which we add any other income that we might earn, or any gains. In this case we've got income. We've got rent received, or rent receivable, and in this case it's 22,000, and that brings us up to 269,000, from which we're going to subtract our expenses. The rent receivable there is 16,000 received plus the 6,000 we're owed, giving us 22,000. So we take off our expenses totaling 146,200, and that will give us our so-called bottom line. That will give us our net profit for the year. Net profit, as you can see there then, is 132,800. We're not finished yet now, but that's our net profit. So we have sales, that's cost of sales, gives you gross profit. Add any other income or gains. That brings us up to 269,000, less our expenses, and we have net profit of 142,800. And continuing on then with that, just to write down our 142,800 again here, our net profit 132,800. Once we've got the net profit, we're into what's called the profit and loss appropriation section of the account. So we're going to give our shareholders their cut out of the profits of the company. So we've got dividends of 14,000. So we're keeping back, we are retaining profits or retained earnings. Earnings is only another name for profit. Retained earnings 118,800, to which we add the profit left over at the end of last year, which would be the P&L balance on the 1st of the 1st, that's the start of this year, 85,000. So that means that at the end of the year, the P&L balance on the 31st of the 12th is 203,800. So that's the balance of the trading and profit and loss account that we're going to bring down to the balance sheet. This is an overview of the trading and profit and loss account. We'll come back later and do those figures in greater detail. We'll go on now to have a look at the balance sheet.